in the first half of 2016, we had very strong performance from our infrastructure assets, and they are the main drivers of Ferrovial's valuation. Contracting was a touch softer. In infrastructure, the 407 ETR stands out again with very solid growth in revenues and EBITDA, and that has enabled a growth in dividends that was announced in July, and therefore is not reflected in the results that we publish now. Also in the Dallas-Fort Worth area, the managed lanes keep growing. They are in a ramp-up phase, and they will keep growing in the coming months with a very solid performance. In airports, we also had a good contribution and EBITDA growth helped by commercial revenues and also by efficiency initiatives with cost reduction. In construction, we had a lower contribution this time, but of course with margins above the sector. The lower contribution is caused by some very important works being finalized in the US and also with contracting domestic market. But Budimex is growing the contribution and it's also growing profitability and should keep a good trend going forward. In services, Spain pretty much holds, and then we have the UK with a lower contribution that is affected by the budget pressures of a local government. They are not ordering project works that usually have a higher margin. But the company is bringing up some efficiency initiatives that should help reduce costs and improve margins. Also, services completed the acquisition of Broadspectrum. That is a very important platform for growth in Australia. We only have 1 month of results consolidated, but in the net cash position, we have the effect of buying the shares, roughly 500 million euros, and also consolidating the net debt of the company. That is something like 430 million euros. The combination of construction and services has a record high backlog with more than 36 billion euros held by the acquisition of Broadspectrum. In terms of Brexit, Brexit meant a devaluation of the pound that affected the translation of results, but we have FX hedges that cover the cash we bring in, the dividends from the airports division. We have something like 3 years of coverage. Also, Brexit meant a raise in inflation expectations that affected the valuation of the inflation derivatives. But if this inflation materializes in the future, we should see higher revenues and higher regulated asset base that are both linked to inflation. In terms of the net cash position, we closed with something like 440 million euros ex-infrastructure projects. And here we have the seasonal working capital drainage and basically affected by public clients concentrating their payments more in the fourth quarter of the year. And also we dedicated something like 175 million euros to dividends and shares buyback. In the end, we have a solid performance of the infrastructure assets that should help us narrow the gap, the discount that the shares show in the market.